from the Crypt.
What is up, freaks? Welcome back to Tales from the Crypt. It's your boy Marty Bent in the new studio here at the dig.com offices in Williamsburg, Brooklyn. We moved over the East River. Happy to be where I am right now. I miss Barstool. But on to new things. So the second podcast of the day, believe it or not, we had Seyfuddin Ammous in the office earlier this morning for a quick rip to talk about his book, The Bitcoin Standard. We got into talking about industrial sludge by the end of that one. But I'm very excited for this podcast tonight, not only because of the guest, but because we're drinking again. We've got Bullet Bourbon back in the studio. Need it. It's been a long day. That was an early podcast rip. But we're going to jump into this one. It's going to be a longer conversation than the one I had with Seif. I want to introduce you all to angel investor in the space and prolific writer, Murad Mahmudov. Murad, welcome to the podcast.
Thank you, Marty. Glad to be here. Big fan of the show, and very humbled to be here, especially after titans such as Seyfuddin, John Newberry, Matt Corallo. Really excited and excited to have this conversation.
You know what? We like getting everybody on here, especially if you have very interesting thoughts in the space. And you, my friend, I would say you and your writing partner, Adam Taché, however you pronounce his last name, have written two of the most prolific pieces on Bitcoin this year to date. The Four Faces of Bitcoin and Bitcoin Past and Future. Just curious, what inspired you to write those pieces?
We're always thinking about anything we can do to evangelize this space, to accelerate the adoption. One of our upcoming blog posts is actually a list of 100 things that anybody can do to accelerate the adoption of Bitcoin around the world.
100 things?
100 things.
Holy shit.
We really want to see this movement succeed. We really want to enter an era of sound money and enter an era of true sovereign individuals. So writing long blogs is the smallest thing anyone can do, and we hope that this is merely the beginning.
Yeah, I mean, it's been incredible stuff. I think the Four Faces of Bitcoin in particular, you guys did an incredible job of breaking down sort of the different schools of thought within Bitcoin in particular. Like, obviously, there's a whole shitcoin landscape, but even within Bitcoin, there's factions. So basically, it broke down into monetary maximalists, Austrians, John Nash, Ideal Money, help me out here. Bcashers, and the last one was
sort of the DeSantis, Mark Wilcox school of thought.
The quantum entanglement.
Right.
Bitcoin and its forks are sort of a tree.
Yeah, their vision is almost techno-mystical, as I like to say.
I love this too, because they force people to think different. And so we're in between the four faces of Bitcoin. What mask do you like to wear?
I ascribe to the first one, especially when it comes to Bitcoin itself. Mm-hmm. Sort of more of the Austrian approach. I see Bitcoin as, and it's a very rough metaphor, but almost like a stricter, sounder gold. Mm-hmm. I like what Seyfuddin, by the way, likes to say about Bitcoin, that it's less like an iPhone and more like gunpowder, in the sense that you can avoid using the iPhone and still thrive in the modern age. But like when gunpowder came around, if you weren't one of the civilizations who adopted it, then the consequences weren't very good. I like to say that the digital gold meme is almost like a very loose, very like distant analogy, and the more appropriate description is more like digital monetary nuclear weapons. And just like the nuclear weapons in the middle of the 20th century, if you're one of the top 7 sort of civilizations or nations, and you don't make sure that you have a possession of at least a handful of nuclear weapons, then you wouldn't have the kind of power that other nations would. And I think this is sort of a similar monetary phenomena.
Yeah, have you ever seen that time-lapse video of countries adopting nukes and like testing them on YouTube? It's pretty crazy to see.
Yes.
It's pretty fucked up what we did to some islands in the Pacific, you know? Just completely nuking them.
Well, islands in the Pacific, even more so. I myself am from the Soviet Union, so I believe still Russia has, like, in terms of raw numbers, the biggest number of nukes. Mm-hmm. Either they did or they still do. And they built a bomb, I believe, that was like 60,000 times bigger than Hiroshima and Nagasaki bomb.
Holy shit.
And essentially, they tested them like above Russia, like around the Arctic, where no one lives. And you can still see on Google Maps like 100-kilometer holes, like
craters.
Yeah.
Holy shit, it's crazy.
Yeah.
It's gotten to a point nuke wise though, where it seems like the game theory is such that like the only decision for the game is not to play. You know.
Well, there's a lot of similarities with like these cryptocurrencies as well. Like the whole point of nuclear weapons isn't to use them, but like just to have them. It's almost like a Mexican standoff type situation.
Exactly.
Where you need to have them, almost like an entente in a way, or like a détente. Where a bunch of strong superpowers essentially arrive to this like equilibrium where they have it and it's almost like keep each other in check.
Yeah, exactly. And we're seeing the mad dash for Bitcoins. Maybe it will incite a similar sort of arms race, and I would argue it is. I bet it's all going on behind the scenes.
I mean, I like to say that the moment some mid-sized Asian central bank announces that they put 1% of their portfolio in what will probably be like top 3 cryptocurrencies is what they'll probably do, just not to gamble. I mean, that will be the defining moment. At the same time, though, I believe some of them probably already are doing something like that in small quantities. Mm-hmm. The sort of isolated nations in particular, like Venezuela, Iran, North Korea, there has been some evidence that they're already sort of doing what's called state mining, where they're just either installing mining farms themselves or expropriating them entirely and then just seizing control over them. Because state mining is essentially buying the same thing as buying anonymously with electricity.
Yeah, I saw one crazy stat, like because of how cheap oil is in Venezuela in particular, like the cost to mine one Bitcoin is like $580.
Yes.
You have an automatic 10x on your return right now because the price is falling. But that's insane. Like the sunk cost of $580 to mine a Bitcoin is ridiculous. And I've actually seen videos of Venezuelan state mining farms that are up
in like guards standing with AKs around them. Yeah. Exactly. I saw that as well.
It's insane, and but that scares a lot of people that like these technologies proliferating in these sort of despot run countries run by despots. What do you have to say to that? Like people are like, oh my god, it's like
this. We see similar patterns with a lot of technology. Mm-hmm. Things like war, things like the porn industry, all these things that are like considered to be dark have led civilization towards, eventually has led the world towards greater sort of technological innovations. Even like the earliest use cases for a car was for bank robberies, I believe.
Really?
And yeah, I mean, a lot of the earliest technologies are used for dark purposes because criminals are always looking for sort of competitive advantages and are more willing to take risks, obviously, with new sort of gambles. Mm-hmm. But I think that this is similar to people stating for years that Bitcoin is for criminals and things like that. I mean, that's absolute nonsense. I mean, if you're a criminal, then just using straight cash is much better.
It's much better.
Why would you use a transparent ledger to conduct criminal activities? It makes no sense.
Yeah, in fact, HSBC has teller windows specifically shaped for your briefcases filled with cash if you're trying to launder money and you're a drug cartel or something like that.
I mean, the amount of money that is laundered or otherwise negatively used through cryptocurrencies, even to date, is nothing compared to the amount of money laundering that happens through fiat currency. So,
yeah,
I mean that's that.
It pales in comparison, and you'd be dumb to do illegal activities with Bitcoin specifically because it's fully traceable to an extent if you have pointers at exchanges or on and off ramps. But the reason I brought you on today, we've got a list of things we need to debunk. And we're going to dive into it. First one, blockchain, not Bitcoin. Why isn't blockchain technology like the best thing to happen since sliced bread? Like, it's supposed to solve all the world's problems. It's supposed to solve our supply chain management problems, our art ownership problems, blood diamonds. Why Bitcoin, not blockchain?
I mean, it is my hope, my sincere hope, that even people who in 2014, 2015 really sort of perpetuated this false mantra, even people at banks these days, even the relatively unsophisticated market observers and participants are realizing that this is completely false. I don't want to say that money is the only thing that blockchains are good for. I certainly believe that is their best use case. I believe that over sort of longer periods of time, we will see a bunch of legit non-scam use cases of blockchain technology as time goes on. But my thesis, and this is somewhat counter to sort of the FAT protocols, the shared data layer thesis, is
another thing we have to debunk.
Well, something me and Adam call the Fat Money Thesis, and essentially we believe that the fattest protocol, so to speak, or the biggest value accrual will occur with the blockchain networks that become seen and become used as money. And of course, we can get into who the best candidates are for that upcoming role. But just because a lot of people say that, so many people are building on top of Ethereum, man. They have like 400,000 developers, don't they? I don't think that the amount of people building on top of a system is necessarily the determinant of what will become the biggest, soundest form of money of the future, or what will become the neo gold, if I may. I think that theoretically, of course there's some overlap, but theoretically you can have hundreds of useful dApps on top of Ethereum. I mean, let's entertain that idea at least. And have quadrillions of dollars moving through the Ethereum system or moving through any kind of smart contract system, and it still wouldn't accrue value. I mean, that's theoretically possible, due to the by now famous velocity problem, of course.
Exactly.
And what really matters is which crypto asset people will hold for months at a time, for years at a time even. Those are going to be the crypto assets that will become double-digit trillion-dollar networks if we calculated it in 2018 US dollar terms. The most annoying people are those who say, the killer app for Bitcoin and the killer app for blockchain hasn't been invented yet. Those are the most annoying people, because Bitcoin is the killer use case. We're trying to replace money. We're trying to create a better form of money. The second most annoying thing is people like Bcashers, Ripple lovers, IOTA lovers, Nano lovers.
Hey, we respect Bcashers here. We refer to it as BCH, all right?
Yeah, we got to be politically correct. Litecoin lovers, even, I would say. They say, but Nano is faster. It's so much faster. I mean, a lot of people, and a lot of people are lately talking about this. They confuse means of payment with medium of exchange, and
this was a good tweet storm. Was it you or
somebody tweeted like a quote from like a Telegram group that I wrote? Yeah, but
yes, that was it.
Yeah,
that was it.
So like what makes something a medium of exchange is that people are willing to exchange it for goods and services. And if something becomes a desirable store of value and essentially saturates the vision and the market for a store of value, if people see other people desiring something as a store of value, they will be willing to accept it as a medium of exchange. The speed of the network isn't even in the top 5 most important properties that will, I believe, define the store of value winner. And so we're not trying to build a better PayPal here.
Trying to create a new money.
And frankly, even if we were, I would find that unexciting. What we're trying is to create better central banking, essentially, and a better form of monetary unit.
Yeah.
Because PayPal is merely like the tray on top of which the food rests. It's a pipeline. That's all it is. Vijay Boyapati has a very good article, The Bullish Case for Bitcoin, and he's
Incredible.
also...
That was a series, and he rolled it up into one article. It's incredible. If you haven't read
That
it
was
yet,
one of the best articles that is on Crypto Medium.
real_VJ. Look him up on Twitter.
Shout out.
Shout out VJ. If you ever want to come on the pod.
Yeah, and
Open
like
invite.
essentially the total addressable market and for the payments industry is nothing compared to the total addressable market for wealth, or for monetary instruments.
Right.
And it's the latter that we want, and it's a much bigger elephant.
So you said the speed of transactions is not even in the top 5 of the future store value in your mind. What would you say are the most pertinent attributes of the store value?
So there's a lot of debate around this issue right now, and there's a lot of talk about sort of path dependency and ways to which sort of this grand store of value achievement will be accomplished. But I believe that much more important than raw speed of transactions is security. I think security is number one, and both sort of the security in terms of the quality of code, because at the end of the day, it's important to understand that these cryptocurrencies are what I like to describe as hybrid money softwares. And I believe a lot of thought leaders in the space, quote unquote,
Thought leaders,
believe that...
Run away from the thought leaders, freaks.
Yeah, if somebody says that they understand cryptocurrencies, then they don't understand cryptocurrencies. It's like Albert Einstein said, if someone tells you that they understand quantum mechanics, they don't understand quantum mechanics. Yeah. So these are hybrid money softwares, and a lot of people pay more attention to the software and less attention to the monetary aspects. And I believe that we need to the monetary aspects, because the end desire and the end scenario where immense amount of value accrues to these protocols is if they become global money. So I think when we're trying to invest, when we're trying to analyze, when we're trying to see which protocols will truly be huge in the future, then we need to look at the monetary characteristics need to take precedence. Mm-hmm. And so I believe that security, both in terms of cost of mounting attack, and we can talk about hash power, proof of work, etc. But security in terms of cost of mounting an attack, and security in terms of quality of code, general levels of decentralization and censorship resistance is why we are here in the first place, and that matters a lot. That's one of the reasons I don't think that something like EOS or something like Ripple or Stellar will ever become global stores of value, because they are remarkably centralized. And at that point, I might just use dollars. Like, why would I use those things? Exactly. I think that immutability and general ledger irreversibility is very important. And for sort of the people who pay particularly careful attention to who consider that blockchains are supposed to be as irreversible as possible, some of the protocols that have been known to reverse certain transactions or cancel certain blocks in the past, that doesn't bode well for the credibility of their system.
Is that a subtle knock at Ethereum?
I mean, we all remember what happened in June 2016, in the summer of 2016.
You can all stop trading now. Okay, guys, you can stop trading now.
Yeah, I think that sort of the credibility of monetary policy is the most important thing. Mm-hmm. A lot of people are saying, oh, we need inflationary systems and they're more sustainable or whatever.
Let's get into that. Like, what the fuck? Like, Bitcoin was an overt, basically, it was an overt response to a fiat inflationary system, like, written into the Genesis block.
I mean, I think this is becoming, like, somewhat of a controversial opinion, but, like, if it's not fixed supply, then why would anybody invest in these things? Like, that's the biggest value proposition. Right. The whole point is digital scarcity. That's the number one innovation that Satoshi gave us. If it's the 21 million Bitcoin supply limit is the most important thing in the system. Right. If you're going to start inflating these systems, like most smart contract protocols are trying to do, like Peter Risen wants to do with his Bitcoin Unlimited scheme or whatever, then like the value proposition just isn't there. The whole point is to have sound money, and sound money is a disinflationary one, and one when there's a fixed cap. So like that's that. Yeah. Now, it gets a little bit more complicated because once sort of people have raised, like Princeton researchers have raised a problem that, like the way Bitcoin is right now, if the fees are a bigger proportion of sort of the resources that are incentivizing miners as opposed to the inflation rate, then they might engage in some malicious, they might be incentivized to engage in some malicious activity, fee sniping, things like that. But I believe that these problems are solvable, and we still have 15, 20 years to solve them.
Yeah, that's what I talked about with Matt Corallo. I think we ended up on like 12 to 15 years, like with the way the block rewards are lining up. It's definitely a problem that needs to be solved. Like there needs to be a subsidy for the block reward, but it all depends on the price, right? Like, so if the price appreciates the pace it has been, like you might only need like very, very small fees on a Satoshi per byte basis, you know?
For sure. And I mean, there's only so much money in the world, but a continual rise in price would certainly help the situation. At the end of the day, I believe the fees would have to go much higher. I believe also...
do you think we need like a 12.5 Bitcoin per block fee regime in the future? Like right now, the block reward is 12.5 Bitcoin.
No, but it's going to halve in 2 years.
Yeah, exactly.
Yeah.
But what is, or what will be the acceptable fee reward per block, fee collection per block, or whatever
Well, there's going to be a fee market. I mean, it's
Exactly.
going to be decided by the free market. Our hope is that we can engineer the system in a way that the fees that miners will be receiving from people using Bitcoin as a transactional system will be sufficient to make the system sustainable and make the security of the system robust.
Mm-hmm. Yeah. And let's dive into that, the security of the system. We were talking about the feedback loop that is Bitcoin mining and the beautiful incentive system that Satoshi designed. So Bitcoin is a beautiful feedback loop. I would say the feedback loop started with Laszlo, with the pizza, when it moved from a collectible to somewhat of a medium of exchange. As soon as somebody put value on it, like, all right, I'm going to value these Bitcoins at two Papa John's pizzas, it started the feedback loop, which is price. Miners saw that, hey, somebody's valuing these Bitcoins. I'm going to expend some energy to try to get some and liquidate that for some value. So you see a price, that brings on miners, which brings security to the network, which makes the network more secure, which in turn makes the network more desirable for people to store their money, which drives the price higher, which brings more miners, which makes it more secure, which drives people to buy it. And it's a feedback loop. And you were talking about one part of this feedback loop that I was missing, and that's the hardware.
Well, yes, and to add yet another sort of additional positive wrinkle to that feedback loop is the fact that sort of the efficiency, the many different kinds of efficiencies of ASICs that are securing these systems have also been improving. So this essentially the exponential curve of security, which are sort of securitizing the system, is even steeper in that sense.
Mm-hmm. What do you mean by steeper? Like the efficiencies caused by the R&D going into making more efficient ASICs is like...
Precisely. I believe the cost of the raw cost of hardware has been improving, and also the energy efficiency of ASICs has also been improving per unit of security that they add to the system.
Yeah, there was a crazy stat. I don't know exactly what the stat is or line or tidbit is that like there's never been a turnaround from R&D to production of chip manufacturing than there has for like ASIC chips for Bitcoin mining in particular. Like it is driving people to innovate at a pace that we've never seen before.
For sure, and that's one of the biggest differences between sort of the Bitcoin standard and the gold standard is the fact that like the more people that elect to use Bitcoin as their store of value, the more security it will become, It's one of the most secure systems in the world in terms of the raw computational power that's securing it, which makes it very secure. I think from like a cognitive perspective, that's a very interesting point to understand.
Yeah. Do you think we ever level out in hash power, or do you think we move to Dyson spheres and just keep getting as much energy as possible?
I think it will like probably taper out in like a S-curve type fashion, but it will remain very, very high.
Yeah, yeah, and that's I think last night at BitDevs we brought up the website that shows you how expensive it is to attack a chain, and it would cost you like $500,000 an hour to try to attack Bitcoin, but the price is probably precipitously higher considering who you need to coordinate that and blah blah blah.
Yeah, I haven't delved into this issue that deeply, but I believe that, like, are you talking about the Crypto51.app or something? Yeah. That though the price is shown there, well, they don't include the hardware. They only include the electric component.
The hash power, yeah.
And also, like, it's the cost to attack the system, I believe, for 1 hour.
Yes, for 1 hour.
For 1 hour, yeah. For the big cryptocurrencies and Bitcoin in particular, I believe you would need to like attack it for like many hours to do any kind of significant damage. So
So you're burning $1 million for
right.
2 hours if you're trying
so
to do this.
The true cost would be way more expensive than like the numbers that you're seeing there.
Yeah. Exactly. So we're almost a decade in. Are we past the point of Bitcoin being like secure against nation state attacks?
The point of no return.
Yeah, exactly.
I would like to hope so. The best attacks against Bitcoin probably aren't the computational ones anyway. They're probably social media attacks, regulatory attacks, financial attacks.
Let's dive into these different scenarios, like social attacks. What are we talking about?
I mean, people talk about many different scenarios. The biggest risk against Bitcoin still is probably regulatory, and this applies to I think all sort of monetary instruments that reside on these blockchain systems. Is some critical countries or some critical markets just outright banning or shutting down exchanges. The fiat on-ramps are definitely sort of the biggest bottlenecks. My hope is that once major institutional investors arrive, and I think it's really important that they do arrive. Once they arrive, the Bitcoin lobby is already pretty strong, and the Bitcoin lobby will keep strengthening. If the Harvard endowment, if State Street, if some CalPERS has like Bitcoin on their balance sheet, then and if the government tries to ban them, then they'll be like, come on guys, like what are you doing? Like this is our money, you know?
I love that you brought that up. My dad has actually been trying to convince me to convince the Yale Endowment Fund to invest in Bitcoin, because they put out like a yearly report or whatever, and they have a section on alternative investments. He's like, dude, you should reach out to these guys, get them invested in Bitcoin. But yeah, like you said, like as soon as that happens, it's like there's no turning back.
Yeah, I've been talking to some people about sort of the endowments, and because they are one of the 5 or 6 sort of categories of large institutional investors that are really important. They're relatively conservative, and they move slowly. Even if there are a handful of PMs at these major university endowments that are already seeing the light.
Shout out Marty Paul.
Yes. Then even so, they need to convince their CIO. And even if the CIO is convinced, the CIO needs to go to the board. They need to go to the board, which is full of 85-year-olds who like don't really have such a good grasp or understanding of these digital tokens. I mean, I'm 23 years old. The people of my generation, and especially even more so people younger than me, like those that are 16, 17 years old, who grew up essentially playing Minecraft or World of Warcraft or whatever, to them, the idea of digital gold or digital tokens or digital money is absolutely normal, and it's absolutely fine. And like it's the future. I mean, it's an inescapable future. The question is not if. We're beyond that point now. The question is when. So could be 5 years, could be 25 years, but it's coming. It's coming, and I believe it will make the world a better place. It will make capital accumulation better. It will make markets more efficient. It will make price discovery more efficient. It will make transactions borderless and frictionless and faster and just smoother. And the financial systems will be more liquid and programmable. And there's probably dozens and dozens more benefits that I'm sure you agree with.
Definitely. Let's touch on capital accumulation, though. That's like one thing I was talking about with Safe this morning, is like the average American cannot afford a $400 emergency expense. Like there is no capital accumulation going on in the households these days. Like this I think, will force people to delay satisfaction and start saving for the future. Like it already has done so to me. Like I'm wearing the only pair of pants I own right now.
So yeah, and looking at some of the graphs in America in particular, the savings rate has gone from like 16% in the 80s to 3% right now. At the same time, the spending rate has been increasing, so these lines have been diverging.
Spending going up.
And we're talking about a country with arguably like the best form of fiat right now, which is being printed at a rate of 6.1% per year.
It's not arguable. It's definitely the best. It's the reserve currency of the world.
Right.
Yeah.
And yet the dollar is getting printed at the rate of around 6.1, 6.2% per year. I do believe that Saifedean has what many people consider controversial issues with regard to how the currency system and the money system actually has tremendous like rippling effects throughout the entire society and civilization at large. And you know what, the more I study this space and the more I look into general monetary economics, I think that there is something to what he's saying, because a form of money that is inflating at a slower rate or not at all will incentivize you to think about, what am I going to be doing 8 years from now? Not how I quickly go and buy a fridge today, how I can quickly go and buy some sneakers tomorrow. Instead, you're seeing, let me start a long-term project. Let me dedicate myself to a longer craft, to some kind of an artisanal, some kind of a meaningful activity, instead of just spending it on like useless bullshit, essentially.
That's one thing I've been preaching, is like we need to make like the Iroquois nation and think about 7 generations ahead of us and start planning for that. And that's how you really get healthy society, and that's what Saif and I touched on this morning, is that we are inarguably an unhealthy society right now. Heart diseases at all-time highs, depression, suicide, opioid addiction at all-time highs. Something is wrong. Like, and I, like you, am becoming more and more convinced it has something to do with the growth of fiat currencies and just a proliferation of printing money at will to sustain an economy built on debt.
I mean, I'm going to link 2 points here. One of the other things that are important for a gold standard, and what essentially drives a lot of these sort of shitcoiners nuts, is how slow Bitcoin is to change. And I believe you like to say a lot that Bitcoin will change us more than we try to change it.
Yes.
I was actually having lunch with Saifedean yesterday and discussing this point, and I think it's a very remarkable point. I mean, money is a half of every transaction. And it's such an important thing. It's something everybody wants. So to say that fiat is the zenith of the ultimate form of money ever invented is just ridiculous. We can engineer a better form of money, a form of money that's better in a multitude ways. I believe that a currency that is at least slightly more disinflationary will change people's personalities, and as such will probably change culture itself. Because I don't know about you, I'm sure you've experienced the same changes as well. I can only speak for myself, but also with a bunch of other sort of Bitcoin supporters that I've talked to over the years, is that Bitcoin changes your personality slowly but surely. It makes you save more. It makes you a little bit more disciplined, a little bit more passionate, a little bit more focused, a little bit more like you're definitely thinking for the long term, and you're thinking these are scarce units. These are scarce gold bricks, as I like to call them, in digital form.
Scarce gold bits.
Precisely. And I think that they improve people's personalities more towards sort of stoic ideals. And I think that is very, very good. Because instead of, as people like to say, it reduces our time preference. So we can dedicate ourselves to longer term projects, and this is better because one undertaking that you will dedicate 10 years for will almost surely produce better results both for yourself and for the world than 100 little things that you never finish, or 100 little things that aren't really important.
Yeah. And we were talking about this on the elevator ride up, like how modern art has even been bastardized by this fiat system. And you know, we don't make buildings, we don't make statues, we don't make glorious paintings like Michelangelo used to. We don't do that anymore. There's very few people that do, if they're out there, and I haven't met them or seen them or seen their art in person.
A lot of sort of like Keynesian economists, monetarist economists, like the central bank advisors, etc. A lot of academics in the sort of the economics and the social science sphere at large, they believe that they can design a system from top down that is superior to anything that the market can arrive to itself through an organic, emergent, and bottom-up approach. And I believe the latter is superior. Money historically has been a creature of the market, not a creature of the state. If anything, that is the perversion. Because for thousands of years, we use silver, gold, and other forms of money that people eventually arrive to by natural means. Money being decreed from above is like the very fact that it needs to be supported by state decrees and legal tenders and like debt extinguishing laws and all these things just is obviously like an artificial form of support that makes certain institutions and certain governments much stronger than they otherwise would have been.
I wouldn't say stronger. I would just say that like they just hold so much more leverage, which I mean,
much more powerful.
Exactly. I think there's a difference between strength and power. Right. Am I wrong in saying that?
Definitely. By strength, I mean there's a lot more power that are
they can exert,
wielded by their hands. Yeah.
It's not equivalent to respect. It's equivalent more to like
putting up with something.
Exactly. Yeah. Exactly. And what you're getting in there, like talking about like top-down approach to monetary policy, what we're seeing now in crypto and shitcoins in particular, is people trying to form-fit top-down governance structures on how these blockchains evolve. What are your thoughts on governance and blockchains? That's another thing we have to debunk.
I think it's an interesting experiment. On one hand, we have this P2P anarchic network governance that sort of the Bitcoin full nodes have. And it's very distributed, it's very slow, almost to the point of dysfunctional. But it's very important to note that it's very apolitical. And I believe that the future neo-money winner has to be as apolitical as possible. Mm-hmm. I mean, other central banks, other foreign billionaires, other people would only be interested in adopting something that is entirely apolitical. That is not controlled by a handful of people, that's not just being decided by like behind closed doors or anything like that. That's not a plutarchy or an oligarchy, so to speak. But I think Decred is an interesting experiment, and it's interesting to see how it will play out. I'm kind of skeptical on the governance issue. A lot of people have been putting out this quote-unquote governance hypothesis lately that, oh, if we have governance, we can have any feature. But I mean, I guess their value proposition is, and I would like to discuss sort of the store of value market after this, but their value proposition is that if they have on-chain governance, then they can be a lot more flexible, faster, and nimbler than Bitcoin. Mm-hmm. And if it's 5 times faster than Bitcoin in making decisions or evolving, then it will essentially beat Bitcoin due to its speed or whatever.
But are crowds always right?
I don't think so. And especially not when it comes to these very complicated, these very complex, both monetary and software systems at the same time. That need the precision and understanding of a nuclear physicist. Right. I mean, I'm not advocating for a pure dark technocracy or anything, but I believe that certain people understand the trade-off space and the most favorable paths for evolution much better than the crowd.
I would tend to agree, and I wouldn't even fall back on like conceding decision making to the technical experts. I would just say people can get lost in narratives and make terrible decisions in haste that can trip you up in the long run. So I think this has to be emergent, like we were talking about earlier. The intolerant minority should run this because a conservatism and skepticism over everything is the wisest investment decision in this space in the long term, I would argue.
Yeah, and the Decreds, some of the members of the Decred founding team, their counter argument is that unlike a corrupt government or unlike a corrupt democratic system, here the incentives of like large stakeholders, aka the decision makers, and sort of the small stakeholders, so the rich and the poor, they are aligned because they want the same thing: higher coin price. So the incentives are aligned. I don't know. I think it's an interesting experiment that we will witness. I obviously think Bitcoin is much more likely to succeed than Decred is, but
they had some sick
we'll
sick starter jackets at Consensus. They look swagged out, you know.
They look swagged out, and Decred is one of my top 5 favorite projects in the space.
Mm-hmm.
I like to say that other than the criteria that we've already discussed, I think the number one criteria of any of these systems, of any of these currencies, of any of these blockchains is the quality of the team. Because none of us, not even the smartest person in the space, and definitely not me, know what these, as I like to say, hybrid money software forms will look like 10, 15 years in the future. So the talent of the team, the passion of the team, the ideology of the team, the idealism of the team, and obviously the skills of the team, these are the most important factors because there's a lot of evolution that we are yet to see. And there's a lot of agility that is still required. There's a lot of problems and attacks that we'll need to fight off. I believe that all of these cryptocurrencies in the next decade will see attacks that are much more serious than the Bcash drama or the SegWit2x drama that we've seen. It will make the Bcash or the SegWit2x drama pale in comparison to what's coming. So I think the quality of the team is very important, and we need to look at people who were involved in distributed systems, in crypto anarchy, in cryptography, in trying to reinvent money. Some of these people have been trying to do it since the 90s, or at least contributing to bits and pieces of the infrastructure, because this is not a 10-year thing that we've had so far. This has been a 40-year adventure, 40-year affair. Only sort of the advent of sort of this distributed systems has this finally been possible, because there is no snake, there's no head of a snake that's possible to cut off so easily.
Exactly. And that's like, you were saying, like, we can't even comprehend the attacks that are coming. Like, the market right now can't even comprehend the attacks that are happening. Verge got 51% attacked and the price went up by 20%. Like, we don't even know, like, the market doesn't even know what's secure and what's not right now.
These are the most inefficient markets that I've ever seen in my life. Like,
right?
I believe Verge got 51% attacked, and then it like pumped by 15% upwards.
Yes.
I mean, it just makes no sense. It's almost like people don't care anymore. Like, I don't know, or I think a lot of these shitcoins have a lot of passive investors who are just like, whose like money is parked in these coins as part of their 80 coin portfolio. And like, they're just like either can't keep up, or maybe they just don't care. I mean, I don't know. So many people could have like $1,000 each in these coins, multiplied by like 50,000 people, and then it, because the market caps are so inflated as well, especially of the altcoins, of the shitcoins. Just because it says that, oh, it's a $300 million network, doesn't mean that there's $300 of real wealth parked there, or maybe like 40 million or something, maybe less.
Yeah, and even that, like, it's like I've said this in the past, like, it's all fun and games now. Like, people are just trying to pump and dump shit coins, make profit off trading this stuff. Like, we're really going to see Bitcoin hit the scene in earnest when shit hits the fan on the geopolitical landscape. Like, and it's like, all right, we don't even have time to fuck around with these shit coins and speculate. Like, we really need a flight to safety. And right now, it's either gold or Bitcoin. And Bitcoin's more accessible, easier to transport, and that's going to be the better value proposition in the future when geopolitical situation hits ahead.
Well, yeah, there's two things that I'll say here. If Bitcoin unfortunately hasn't seen like a hardcore deflationary recession hit during its lifetime, and we're in the middle of like almost a 10-year bull run, the equity bull run. Yeah. There's definitely at least some kind of a crisis happening soon, and I think that
the Tinder is dry. It's getting hot out.
So it will be very interesting how Bitcoin fares in that situation. I think, unfortunately, in the eyes of most serious asset managers, this still remains a speculative asset at one point. Because when we talk about sound money, when we talk about hard money, we're not talking about Bitcoin right now, but we're talking about the intrinsic qualities of the potential that it has to become in the future. Now, for most of these asset managers, and most of these asset managers aren't libertarian, crypto Austrian cypherpunks. They don't care about these things. And understandably, they don't care about these ideals.
Yeah.
Their life is fine. They're already making tens of millions of dollars. They like the status quo. They want some uncorrelated return, or maybe a success story that will pan out in the future as a diversification, something, or a good risk return profile, something like that. But right now, Bitcoin, all cryptocurrencies, Bitcoin perhaps less so than everything else. Everything else is very speculative. Bitcoin slightly less so because it has a much greater network effect, linear effect, etc. But I think that if we had a sharp deflationary session, Bitcoin would be sold off as of today. Now, if we have a different kind of crisis, if we have a currency crisis, if we have major countries or a handful of major countries like credit default, or some kind of a treasury default, or unable to pay their debt, something like that, then that would be very, very positive.
That's what I was alluding to. Like, yeah. So if we have like an equities correction, people are going to have to sell their Bitcoin to pay if there's a recession or something like that, and the U.S. dollar remains as the reserve currency of the world. Like, yes, people are going to sell their crypto for fiat to live, and that could be bad for the price of Bitcoin. But again, in the long run, like, it comes back to currencies. Like, if there's a currency crisis, if a currency meltdown, I'm not going to try to predict it. People have been trying to predict it for decades. Nobody knows when it will come, but I do believe wholeheartedly that it's unsustainable in the long run, the policies that these central banks are following.
I mean, I have to be honest, dollar is a very strong currency.
Yeah.
With very powerful network effects.
I'm not going to argue that.
And the American central banking is much more skilled than most other countries, than second or third world countries.
Japan did what the Fed's been doing for the last 10 years. They started doing that in the 90s.
Yes, but Japan has different demographic profile.
That's
and
true.
A completely different
That's
economy.
True. That's true.
But
the policy is very similar.
The point I'm trying to make is that Bitcoin and all other cryptocurrencies, to be honest, their quote-unquote enemy or their target market for the next 10 to 15 years isn't the dollar. It's the tail end of weak fiat currencies around the world. Mm-hmm. Mismanaged fiat currencies, small fiat currencies, corrupt fiat currencies that are managed by central bankers that are unskilled, that are straight up stealing or straight up essentially stealing from their citizenry by inflating the currency whenever they have any kind of problem as an easy exit out, and monetary metals to an extent. Those are the things that Bitcoin is attacking, in my view, and it's not a serious conversation to be having right now for it to be displacing the dollar or the euro entirely. But we still have tens of trillions of dollars of other things that we could subsume before we are faced with much more serious currencies.
Yeah, the upward, and that's why people are investing in Bitcoin now, is because the upward potential of the price movement, if that situation unfolds, is astronomical.
Precisely. I mean, Bitcoin still has 100x, 200x to go, or more, according to some Bitcoin maximalists. But
Pierre's saying 10 million a coin eventually.
Well, 10 million a coin makes sense if dollar hyperinflates. I mean, the number doesn't even matter at that point.
Yeah, if you want to see what Bitcoin price looks like in a hyperinflationary economy, go to local Bitcoins or coin.dance, and look up the Venezuelan, the volume chart in Venezuelan bolivars for Bitcoin on local Bitcoins, and that it barely increased any Bitcoin buying, but it's hyperbolic in terms of bolivars.
Yeah, definitely. I also will say that, I mean, if Bitcoin goes to 1 million in today's terms, that's a $21 trillion currency, right? Which is a lot.
Yeah.
Which is a lot. But
it's the size of the U.S. economy,
Yeah. And I believe the M4 of the US dollar is like 30 trillion or so, 32, 33 trillion or something. So I mean,
what's M4? Cash in circulation.
Yeah. So this is like very loose. So like I don't remember it precisely, but M4 is like everything.
Cash circulation.
M0 is like cash or whatever, or like the circulating one. M1 is like you add some bank deposits. M3 is like you add some like the shadow banking or whatever, and like M4 is like everything. There's M5 as well, but like I don't even know what that is. It's some derivative stuff. Yeah.
Well, exactly. Yeah. That's like what's Safe and I were also talking about this morning too. Is like the CPI and how it's been bastardized. Like these central bank figures will just add variables that make you think like, oh, everything's okay, but really they're just changing the underlying equation to hide inefficiencies.
Well, the Federal Reserve hasn't even been reporting on some of these figures for like 8 or 9 years now. The M2 and M3 or is it M3 has that hasn't even been public information. And to be honest with you, this just doesn't apply to America. This applies to every country. I don't believe a single data point that they're putting out.
No.
I don't believe a single one. I only believe in like the markets over the long term and human action and human desire, and whatever they end up choosing and whatever they end up pricing. But a lot of this data is distorted. A lot of the markets are no longer. Theoretically, markets are supposed to be efficient pricing mechanisms or price discovery places, but all this like extreme central bank activity and their run towards creating a wealth effect around the world, their indiscriminate buying of so many different assets has essentially stopped markets from being like efficient price mechanisms, and now they're just inflated assets.
Right? Like there's good evidence out there that like the Bank of Japan in particular is printing money and putting it right into Japanese ETFs and their stock markets. Like,
I believe the Bank of Japan already owns like 70% of the ETF market in Japan. Like,
it's ridiculous. They're printing money and
they're essentially like nationalizing the economy, like slowly turning into nationalized economy. Yeah.
But if you're a fucking trader, like that's an easy trade. Oh, the Bank of Japan is going to print money and push it into their ETF market. Like, let me buy some Japanese ETFs.
Well, that's why fixed supply money is so interesting, because any kind of price that we would arrive to by using Bitcoin would be pure.
Right? Exactly. Do people want that, though? Are we ready for a world?
Yeah, like a lot of people, I'm realizing more and more that most people, they don't care about some money.
They don't give a shit.
They don't care about decentralization. They don't care about distributed systems. They don't care about cypherpunk ideals. They don't care about this and that and all this idealistic stuff. So let's be honest. What really matters, and what can we do to make this market go 10x, make this market go 100x, make Bitcoin become a money of the future, a money of the internet. Mm-hmm. Whether you like it or not, the most powerful thing you can do is to convince wealthy and large asset managers and billionaires and high net worth individuals to put even 1%, to put even 0.5% of their portfolios into these crypto assets.
I was that junior analyst in 2013 screaming at the fund I worked for, we should be investing in Bitcoin. Fiat currencies are going to die. Like, we should be getting in Bitcoin. It's happening. It wasn't ready back then. It wasn't ready 5-6 years ago. But I think some managers in particular are willing to take, it's in their risk appetite, and they're going for it. But I got laughed out of I didn't get fired or anything. I quit, but people looked at me like with cock eyes, like, what the hell are you fucking talking about?
I mean, a lot of older people think that like this is still some weird tokens that people buy weed on the internet with, like, but it's not that.
I don't spend my Bitcoin.
Exactly, and I think like a lot of these asset managers are very smart people, and like they can understand the systems.
They err on the side of caution. They're very conservative.
They're very conservative. Of course, they want a little bit more regulatory clarity. They want more custodial solutions. They want more time for research. But once you see a famous billionaire or a handful of famous billionaires announce that they put 1% of their portfolio in, or like a handful of university endowments or a handful of sovereign wealth funds, maybe even a handful of central banks, but those will come later. But once some asset managers will go on record saying that they're bullish on this, it's like they say, it's slowly and then suddenly, and then it will be a tipping point, and then it'll just go parabolic.
Yeah, and you know what I think's holding it up right now is just like the due diligence and compliance that like being on a portfolio management team and had like we were a fund of funds, we were a 40 Act fund of funds, so we had to do a shit ton of compliance and due diligence trips. Like the amount of red tape that these funds need to get through before they can invest in these types of assets, like people don't understand, and that's what like worries me about some of the crypto hedge funds out there. I'm like, do you have your like compliance and due diligence like lined up on the back end? Because this is like very, very important, and you cannot fuck up the due diligence and compliant aspect in particular, and that's why I think institutional money has been hesitant to enter the space up to this point.
Honestly, I think like the value proposition of a crypto hedge fund, and the value proposition of a crypto hedge fund is, I increasingly don't even see it anymore, because like at the end of, unless you are an active trader, unless you're a talented like, algorithmic trader or a talented active manager, a talented volatility trader or whatever, at the end of the day, like in the next 2 or 3 years, especially if you're just a buy and hold crypto fund manager, you're just going to be holding the same 5-6 coins. And so like, why would you invest in that? If you're an asset manager, you can go and buy these same 5 coins.
And the stress of like all the compliance and shit that comes on the back end and having to hold other people's money, just like.
Exactly. I mean, some of them are really, really good. Some of them are run by very, very smart people.
Yes, but we're talking about like the top 10% or 0.1%,
or top 3, top 4 funds. Honestly,
yeah. Exactly.
Some of them are really good, and some of them have extremely smart people working on there. Extremely smart, savvy researchers, but. A lot of the crypto hedge funds, most of the crypto hedge funds are just glorified custodians, and you're paying them 2 and 20 per year to
3 and 30 in some
to do 3 and 30
instances.
Yeah, it's like somebody was joking.
So like, for you freaks out there that don't know what 2 and 20 and 3 and 30 is, so whenever you invest in a hedge fund, you have fees that you have to pay. A 2% management fee, which you have to pay no matter what, and then a 20% profit fee. So if the fund makes profit, they get 20% of the money that they made for you.
Actually, irregardless of their hardcore shilling of Decred, I really like Placeholders model, which is more of like a VC than a hedge fund. Placeholder is Chris Berniski and Joel Monagra.
Yeah.
I like that they have like 10-year lockups, and they can essentially take a lower time preference view on things. They can engage more with the entrepreneurs and the founders that they're engaging with, and I believe like their fees are lower, and their fees, some of their fees are fixed when compared to some of these crypto hedge funds, which allows the LPs to compound their wealth faster. And yeah, I think it's a better approach.
Yeah. This is a topic I feel comfortable diving into. We're 2 young bucks here. Do you ever? I worry. Like, are we just naive? Like, are we naive, or is this like real? Like, I'm 27, you're 23. Like, who are we to evangelize this technology? Like, are we just dumb young millennials?
No, I think it's coming, and I think we can only be wrong on timing. It can take like a lot longer than we hope it will, but it will come, because like fiat currencies and gold are essentially the best as they can be already. But these forms of money will only keep improving. They'll keep being better, they'll keep being faster, they'll keep being more programmable, they'll keep being more secure, hopefully more private, and there'll be a lot more things that you can do with them. There'll be a lot more things that you can do on top of them, and I believe they are a 10x improvement over existing monetary instruments. And this gap will keep increasing, because existing monetary instruments have saturated their potential.
Yeah.
While cryptocurrencies, honestly, this is only the beginning of the journey, and they'll keep getting better, they'll keep getting bigger, and this is the new asset class. I actually don't like to think of it as a new asset class. I think it's a replacer. A replacer for many of the monetary instruments.
I've been harping on new asset class for a while. Why do you say replacer?
So because I mean it's zero sum.
Mm-hmm.
Even though at this small scale it doesn't look that way. But if these go into trillions, then they can only go into trillions if fiat and monetary instruments go lower. There's only so much like money and monetary instruments and wealth in the world. So for Bitcoin or for any other coin to go into 40 trillion, 50 trillion, that would mean that there's less wealth parked in fiat currencies, and there's less wealth parked in gold, silver, and all these like short-term money market funds, bonds, etc. So it's kind of zero sum. I mean, people like to say, oh, there's going to be an expansionary effect but like expansionary effects aside, it's zero sum. For Bitcoin to go into 50 trillion, this same 50 trillion needs to come from other monetary instruments. Yeah.
And that's been my investment thesis since 2012, is we're going to see I've been calling it a great rotation into cryptocurrencies from traditional financial assets.
Yeah, it's essentially going to like suck the value in.
Yeah.
Hopefully.
And, but it's always good to question, because like people think we're crazy, you know, like people think we're absolutely crazy getting into this stuff, but I do truly believe in it. And I think a good example is this, like you were talking about, like the financialization of traditional assets has just gotten to such a point where it's just like not viable on a longer term scale. Like look at Deutsche Bank right now. They have the biggest derivative exposure in the world, and they're trending towards zero, their stock prices.
And smaller profits than Binance. This is 6-month-old Binance.
Right? So Deutsche Bank, a 230-year-old bank, was less profitable than Binance, a 6-month-old crypto exchange in the first quarter of this year.
I think that Bitcoin and maybe a handful of other like blockchain-based projects will unbundle a lot of Wall Street eventually.
What do you mean by unbundle?
Some of the rent seeking that they are engaging in right now, those profit margins will collapse because like everything will be algorithmic. Everything will be based on distributed ledgers and based off of some of these smart contracts. I believe they will be useful in some respects, and I mean, banks won't disappear because some people will want them for custody, some people want them for advisory, mergers and acquisitions. Like, I mean, these sort of sell-side services will remain. But I think these algorithmic software-based systems will increasingly pose as very, very fierce competition. And having a monetary unit underlie these systems will be a feedback loop. They'll make the system stronger, and the systems will make the monetary unit stronger.
Yeah.
That's why I like to say that, like, in the short to medium term, things like Ethereum and all these smart contracts, I believe they're good for Bitcoin because, like, each of these CryptoKitty or Augur platforms, they'll bring in more new people, and hopefully, the big chunk of this wealth will end up in Bitcoin, which is a store of value.
Yeah, and that's one thing I've been hearing more and more lately is that like people will find Ethereum first because it's the easiest to build on and stuff like that.
And because all the dApps, gambling, dApps, prediction, dApps, cards, decentralized roulette.
And they figure out how...
Decentralized Google Docs.
They'll figure out how like insecure it is, and they'll eventually fall like, all right, I want to work on the most secure, dumbed down protocol.
Right.
And it makes sense. Like, and so let's get into that, like dApp platforms and stuff like that. Like, again, I do appreciate them as much as I hate on Ethereum and all these. I hate out of love. Let me just make this clear to you freaks out there. I hate out of love because I want the best out of everybody. But I do strongly believe that we will have dApp platforms in the future. They'll just be software that you can plug Bitcoin into as fuel and just execute contracts.
Precisely.
Like, right?
Well, exactly. So I don't hate dApp platforms. I think dApps and smart contracts are very cool, very useful. They will be a thing. They're just not going to be the store of value.
Right? Exactly. There's going to be software that enables people to put Bitcoin in, and as soon as an event happens,
well, this is the thing, especially
distribute it one way or the other.
Especially with their move to proof of stake. So it's a very interesting, like another loop. I guess it could be positive or negative. A proof of stake system, because it's secured by the money itself and not by external hash power, a proof of stake system can only be secure if the underlying token is very valuable. Mm-hmm. But as I believe, the underlying token can only be highly valuable if it becomes seen and used as a store of value. But for something to be a store of value, it needs to be very secure. So like it's kind of like a circular logic. Maybe they they essentially bootstrapped off of proof of work, and now they want to attempt to do the switcheroo, but we will see. If price of Ethereum collapses, it's a very insecure system because it will be very cheap to attack it.
Yeah.
Only if the price keeps climbing will it remain a secure system, and this applies to essentially all proof of stake systems. They need to be very valuable to be secure.
Well, let's jump into this. Like the supply of Ether is Vitalik very publicly stated, I believe in 2016, that the supply should not go over 100 million. And we found out this week that it's at 120 million already.
Well, it passed 100 million this morning.
Passed 100 million this morning.
Yeah.
Excuse me. Yes.
Yeah.
And then he came out and said it shouldn't go above 120 million. So this is like, it's like Taleb. It's in, what book was it? It's The Black Swan? I believe it was The Black Swan. The Black Swan, where Nassim Taleb says a project, if you set a due date of 50 days and it comes to the 50th day and you don't hit it, your project gets extended to 100 days. And if you get to 100 days and you don't hit your project isn't finished, it's going to take you 1,000 days to get it. And like that's what reminds me of Ethereum moving to proof of stake from proof of work, is that they've been saying it's going to happen, where it's getting to a point where it may never happen because they can just not. They just aren't able to do it. Like, how come they haven't moved?
I believe they can only compete with Bitcoin if they put a hard cap. But even so, their monetary policy isn't as credible, and their blockchain isn't as credible as Bitcoin's. No. And I mean, I can list 3 dozen things that it's not as good as.
All right,
Bitcoin
we got
does.
36 things to list right now. Get into it.
Well,
I'm kidding.
I can list some if you want.
Go for it. List some. List your top 3 or 4.
Well, obviously, I think it's a much more secure system. I think the Bitcoin's Lindy effect is very, very powerful. Bitcoin has the first mover advantage. It has the highest market capitalization. It has the highest liquidity. It has the highest credibility of monetary policy, highest scarcity, highest popularity, highest brand recognition, highest censorship resistance, highest distribution of ownership, highest robustness of code, I would argue. One of the most, if not the best team in the space working on it. Highest level of financialization with the futures and the options. I would say the strongest cult, the most intense cult.
Hey, we're not a cult.
I mean, I say cult in a good thing. Cults are good for cryptocurrencies because they need very intense bootstrapping to compete.
Right.
And like the highest infrastructure support. Yeah, I mean, and I like the conservative and the prudence of the developers. I like to say that the carefulness, almost the OCD like thoughtfulness and thoroughness of the developers is why it's a good store of value.
Yeah. Like when the Bitcoin devs were working on implementing SegWit, they tested it so thoroughly that they found a flaw in SSL security, like online.
Yeah, they do their work. they do their work so good that they fix other people's work.
Right? Exactly. And again, for you freaks out there that may love these move fast and break thing blockchains, like I just don't think for money in particular and for these protocols in particular, it's not the best mindset to have.
We're already building some $100 billion networks. We're trying to achieve $1 trillion, $10 trillion networks. This isn't like a dating app. This isn't a food delivery app. This is not a social network. Move fast and break things doesn't work here. You need it's like you're building a nuclear submarine. It's like heart surgery. It's very important to be very careful.
Exactly. And I go back.
Because once again, it's high time preference. People want the chocolate now. They want it fast. And they want it right now with extra sugar.
Well, and that's another thing I was talking about with Safe this morning, is that people are just born into the system and thrown into it. They're so used to it. They have their tendencies, and it's hard to change. You know,
also,
people are like, this is the way the world works.
I've read research that between 2005 and 2015, our like short-term attention spans have like collapsed since like from 20 seconds to like 6 seconds or something.
Really?
Yeah.
What was this study like? Or what?
Well, so
it makes sense to me.
Because of the fast pace of the internet, because of this like sugarification of junk food, because of everything being at the like tip of our fingers essentially. I like to say this confluence of Uberification, Tinderification, pornification, sugarification of culture has like essentially made us impatient, has essentially made us, everybody's like OCD and ADD right now. Nobody can concentrate on anything for more than 5 minutes. And
we've been in here for an hour and 10 minutes having a beautiful conversation. I've been enjoying it.
Indeed.
And no, I agree. Like, can we change this though? Like, can we revert? Is it even a reversion? That's what I would ask. Like, is it a reversion or is it an evolution to?
You have to fight the currents. And the strongest individuals have to fight the currents. I believe, as I've said, a sound form of money, a sound form of financial monetary institutions will improve the situation somewhat. But at the end of the day, I am a hyper individualist. Everybody has to focus on their own goals and has to. I believe in trying to find win-win situations and do and build things that benefit both yourself and others.
Yeah.
And like that's why I think capitalism works better than these like socialist systems, because it aligns incentives better. It rewards you if you provide society with something of value.
Yeah. I mean, there's no debate.
There's no debate. No, I mean,
There's no debate.
Yeah.
It's not like one's better than the other. Like, it's not like, oh, maybe one is better. It is like one is better than the other. Like, and that, it's just like, and it's basically a simulation of nature, right? Like, you're just figuring out things organically, right?
Of course. I mean, capitalism aligns with, I believe it aligns with evolution much more closely than any of the top-down, like, God syndrome, God complex, these systems.
Yeah, like you talk about like fishing farms and tanks and monoculture on small farms. Like, what happens to them? Like, you try to basically confide the production of fish or food to one certain geological area and like try to make it like repeatable instead of letting nature take its course, and you get fucked up fish, fucked up food. You get arid land. It's you just got to let nature take its course, and I think capitalism does that well, and I believe Bitcoin even takes it to a whole nother level.
Well, that's what I like to say. Exactly. I like to say that Bitcoin will essentially make socialism impossible, or very much harder, because
You cannot. You're not taking my Bitcoin to pay for a socialist government.
exactly. And I mean, for something to have like a socialist or, God forbid, communist system, the government needs to have a control of money, control of currency. And like Marx, in his manifesto, he wrote that like the number one thing is to take full nationalize central banking and to have a sole monopoly on the money supply. I mean, of course, the government's like that. It gives them so much power. Yeah. I believe that the institution of central banking and fiat currency is the strongest institution in the world. I mean, it allows so much power.
So much power, so much waste,
Inefficiency, bureaucracy.
Like the bureaucracy. That's what I think people are getting most pissed off about, is the bureaucracy. Like, people, again, like going back to the short attention span things, like maybe these central planners have dug their own graves because they've built a system where we're so like, we want results fast, and they're so monolithic that they can't move as fast that we're asking, that people are now starting to look for alternatives. And maybe the alternative is reversion to a sound system where there is no top-down structure to tell you what to do.
Precisely. And like they think they can design, or they think they can design a system where, and it was going to achieve exactly the result that they want. But it's such a chaotic, unpredictable, multivariable world. And like this is what Austrian economists like Mises or Hayek have always been writing about. Like, in a very loose metaphor, if you give a government $1 billion, or you give 1,000 talented individuals $1 million each, which one do you think is going to spend it or invest it more productively? Of course, it's going to be 1,000 talented people with $1 million each, because they are decentralized, not in the sense of blockchain decentralized. Like they have the information in their local community,
comes down to
local
localization.
structure,
Yeah.
and they can see the inefficiencies and the opportunities and like the local sort of like this price inefficiencies much more effectively, and they can create, I believe, invest and create products much better than a government bureaucracy. By the time $1 billion is spent, like probably half of it is just going to be wasted through inefficiencies, bureaucracy, and these government employees, which are clearly not as good as private sector employees.
Exactly. And you see this, let's harp on this example with the U.S. education system, like public schooling in America in particular. You did not go to public school here growing up, but to get funding at public schooling, like you have, like there's standardized tests, so they're called standardized testing. And to get funding, your students have to get a certain grade on these tests, like in aggregate. And basically, these teachers, instead of trying to teach their students what they want to learn or what they might need to learn, they're teaching for these fucking standardized tests. And it's fucking making everyone dumber, I would say, in the long run. Like, and just let these local, like maybe maybe somebody in Iowa or Illinois or Kansas might want to learn more about farming because there's more farming land around. Maybe let those students go learn more about that. Kids in the cities, maybe they want to learn more about finance, accounting, shit like that. Make them go learn about that, or let them go learn about that. But instead, we have this standardized testing world where everybody's teaching for the test, and it's just like it's a bureaucratic top-down system that makes everybody dumber in the long run.
Yeah, you're essentially just studying for 6 years just to beat some number on a piece of paper instead of studying something you either enjoy or something that's actually valuable or something that's actually productive. I'm a strong believer in apprenticeships, actually.
I am too.
Yeah, and I believe like when you are doing like an internship or a couple of internships or just working somewhere for a year, you'll learn more than like 5 years at a school.
God.
Yeah,
that's why I was so happy to go to school in Chicago, because I was able to take night classes and work during the day. So I started working full time, I think my junior year in college, and I learned more in the workforce than I did at school. Yeah. But I did have to go to school and get the grades. And shout out to my sister, love you, Ave. She's a ceramicist, and I'm pretty sure I'm close to convincing her to go get an apprenticeship with a potter to like become really good at her craft. She's already incredible at what she does, but her time is better spent learning from an expert than going to spend like 80 grand for an art school.
I'm pretty sure you're correct.
Yeah, no, like you're making money, you're not going into debt.
Honestly, I'm kind of skeptical on higher education, because like unless you're studying to be a doctor or you're studying something highly technical like physics or computer engineering or something like that, I don't know, man. These like especially a lot of these people studying these social sciences, you can just study it on your own without spending $250,000. We learn by ourselves. Like no one cares about you as much as you can care about yourself. So at the end of the day, it's on you. And even the best students, their best learning comes from after class on their own. Just focusing, staring into the book, staring into the material. It's not granted from above or anything like that. No. And like the pricing for some of this education is just absurd. I mean, it is
asinine.
Like, so if you look at this, like inflation, deflation, that's an interesting thing. If you look at the markets where the government isn't really involved, like technology, as you can see, computers are getting cheaper.
Clothing's getting cheaper.
Phones are getting cheaper. Clothing is getting cheaper. But healthcare is in America is a disaster.
It's a disaster.
Healthcare.
We need to implode it and just start from scratch.
Healthcare, education, like pharmaceutical, all these like medical things, they're a total disaster. And you see like all these things going red, going high, and all these things going slowly blue. And the slow blue, like slow deflationary effect, is like at equilibrium outside of government regulations, government intervention, capitalism and technology, let alone both those things two together, they're a deflationary phenomenon. Yeah. And that's how it's supposed to be. You're supposed to be doing things cheaper and faster and better, and competition, natural competition that's unhindered through all these licenses, all these taxes. Oh, you have to get a permit this, you have to get 12 permits there, you have to get my signature there.
It doesn't make any sense. And the most fucked up part about it is the things that are getting most inflated are the things that people need most, which is like food, healthcare, education.
Right.
Housing too. Throw housing in there.
Right.
It's fucked up. It doesn't make any sense. Like, and then the Fed tries to piss on your face and tell you it's raining and be like, hey, CPI has been at like 1.7% consistently for the last 7 years.
So why do you think these like one-bedroom apartments in San Francisco cost $2-3 million? Right. It's like San Francisco has the potential to be the next Tokyo if they only just like allow people to expand and like real estate firms, these builders to compete. Like it could be the next big thing. It could be Shanghai, but instead, like all these like extra licensing, all these laws, all these people saying, oh, we don't want this, we don't want that. That's why it just hinders potential.
How do we unleash this potential, Murad? That's what I want to know.
Hyper-Bitcoinization will purify us all.
Do you think hyper-Bitcoinization is possible, probable?
It will take longer than what hyper-Bitcoinization supporters think per pert, but something like it will happen.
Yeah. How do you see it playing out?
As I've said, gradually at first and then suddenly. Mm-hmm. And so this is the thing. Like once Bitcoin goes into this $10 trillion territory, it will its volatility will slowly start to subside. Mm-hmm. One of the problems with Bitcoin right now, just like you said, like I'm not spending my Bitcoin. There are disincentives to spend because there's still 100x plus ahead. But once it's at 10 trillion, the highest it can ever go from here to, let's be realistic, is what, like 30, 40 trillion or whatever. I mean, at that point, more and more people will start to spend because all you have left is 3x, 4x at most, which is like okay to lose out on. 100x you don't want to lose out on. Nobody wants to be the pizza guy, right? Yeah, exactly. So we need to get to that phase, and that phase does require bootstrapping. That phase does require speculation. New forms of money don't come about so often. And that's why it's a slow road.
Millennia.
Precisely.
Millennia.
You know what they say? It's the greatest wealth transfer in millennia. Yeah, which probably is.
Again, it's going to be a great rotation. Like that was my first ever investment thesis. Was like, hey, I believe there's going to be a great rotation from these fiat currencies and traditional financial assets to these cryptocurrencies.
That's precisely why I say that it's...
Particularly Bitcoin. Like, I used to be like a multi-coiner. Like, oh my God, they're all going to take over the world. But as time goes on, it's like undeniable.
Well, that's why Pierre Rochard started Bitcoin Advisory. And that's why I say that like convincing asset managers and high net worth individuals to invest some is one of the highest leverage things you can do.
Yeah.
Because let's be honest, like this libertarian Austrian crypto anarchist cypherpunk money is already in the market. And it's already saturated. Their attention and their wealth is already saturated in the market. Right now, we need institutions to come for the market to explode. Yeah. There's no other way.
And slowly but surely.
Slowly but surely.
And then suddenly.
So this is how I like to think about it. Like every instance, in the next 20 years, every instance of a currency crisis, every instance of hyperinflation, even higher than expected inflation, every instance of government acting too authoritarian, every instance of like bank defaults, every instance of bond defaults, wealth appropriation, some billionaires getting thrown in prison, something like all these things will create more and more Bitcoin fans. Will create more and more cryptocurrency fans because it allows you to hold wealth in an unseizable manner. So, I mean, I guess this is like one of the many factors, but the more bad things that come from governments around the world and the more bad things that come from Wall Street or financial systems around the world, the more people will believe algorithms instead of people. Because algorithm is much harder to corrupt.
It's apolitical.
And it's apolitical, it's neutral, it doesn't have laziness, it doesn't have greed, it doesn't have like all these emotions that humans are prone to. And I mean, everybody if you look at the graph of young people's trust in their government, it's been like it's
cascading.
It's literally like a diagonal down. Yeah. So, and it will keep going down. And like I can only speak for myself or maybe my generation, but we already trust algorithms more than people, and that's fine.
Yes. And this is it's a little bit of a tangent here to this conversation, but this is one thing we touched on the first time we met for drinks a couple months ago. So you came from Soviet Russia, correct?
Yes, I am from Azerbaijan.
And so the CIO, the chief investment officer of the fund I worked for, was also from Soviet Russia. Like he was on pace to be a Russian cosmonaut. And what really woke me up and really made me be like, holy shit, maybe Bitcoin is a thing, was one day we were sitting there and we were just having a conversation talking investment thesis, and we got on a tangent about hypothetical Orwellian future, and I'll never forget it. Dmitry looked me in the eye and he was like, I grew up in Soviet Russia. Like I moved to the States in 94, and you'll never believe the sense of freedom I felt when I was walking through the airports. Like I cried the first time I walked to an American airport because I felt so free. There was nobody there checking me or looking at me or surveilling me, and I felt so free. I can't explain the feeling of freedom that I felt in that moment. And he looked me dead in the eyes, was like, since 2001, since after 9/11, America has slowly been reminding me more of what it was like to live in Soviet Russia with the TSA and the government cracking down and the Federal Reserve policies and that
Patriot Act, NSA.
Yeah. And that's what woke me up, was like, holy shit, like what is happening right now? Like, are we frogs boiling in water? And we just don't notice it. And that's what drove me even further into Bitcoin, was like, all right, just in case we are, like, I need this sovereign currency. And it's crazy because people don't think about it in real time. So, like, I don't know if I'm bringing up anything personal or anything, but like, what was, like, can you speak to that at all, or? To
be honest, like, I'm from Azerbaijan and it's like pretty free these days. Yeah. So like, I can't complain.
Yeah.
But I do see sort of some of the American government has certainly been getting like bigger and more influential in people's lives, obviously, as we've seen. Like it seems that like when compared to like the McCarthyist days or whatever, it's like not as much, but I think they're just getting better at like doing it in the dark, you know?
Yeah, and it's like, so you have Jeff Bezos in Washington State and California about to sell contracts to do facial recognition shit like they're doing in China.
Dude, that's dystopian stuff, man.
Right?
Dude, that's why like look, like I'm a mild Bitcoin maximalist, but
come full on.
I do like some of the privacy coins as well. In the age of like AI interacting with each other and robots paying each other and like all these like billions of financial transactions per second around the world, you want privacy, man, because otherwise it becomes a dystopian system. Like I'm not comfortable with Joe Levin at Chain Analysis and Elliptic like tracking my every move, you know? No. Like of course we have hopes for this situation resolving itself on Bitcoin, and if it does, it would be a very big development. But Zcash, which I think is the most promising,
biggest Zcash bull I've ever met in my life.
Yeah, which I believe is the most promising privacy coin. Mm-hmm. It's only like it's year like if you go on OnChainFX, it's 2050 diluted market cap. It's only 3% of Bitcoins, which I think is undervalued. It should be at least 10-15%.
Yeah,
at least.
Yeah,
and like. As I've mentioned, but I didn't elaborate in the beginning of the show, I believe in what I call the Fat Money Thesis. Mm-hmm. And I used to think, and this is like a very big discussion among people in the community right now, is this currency market going to be winner take most or winner take all? So winner take most, let's say there's going to be 3 or 4 winners, which go in like a power law 70-20-10 kind of distribution. Yeah. And or is it going to be winner take all, with the winner being like 95%? Mm-hmm. And I'm increasingly thinking it's the latter. Like at the end of the day, we'll probably only have one form of money. A lot of hedge funders, a lot of shitcoiners, a lot of multi-coiners, polychainers, they don't like this narrative because if this narrative is true,
there's not enough money to be made.
And if in 6 months all asset managers around the world agree that Bitcoin is sound money and Bitcoin is the winner, then hedge fund makes no sense. And like the reason we have US dollar and euro and JPY and yuan right now is because of borders, is because of like different trade regulations, sanctions, governments, things like tariffs. Once again, taxes, quotas, because of all these artificial things. But in the digital borderless realm, you don't need 5 currencies. Like you only need one monetary standard. And having one unified monetary standard is better for everyone. It's better for all trading partners around the world. It's better for all price mechanisms around the world. I can travel to Japan, I can travel to Cambodia and buy my fruit for the same exact type of money. And all these like utility tokens are probably the biggest scam in the history of mankind.
Let's dive into utility tokens.
99.9% of them are absolute shit. They will all collapse. They will all bleed to death. I hope that this current bear cycle that we will in will have a flight to quality effect. All these 99.95% of ICOs have been somewhere between a scam, a fundraising exit, vaporware, or good intention but useless. Yeah. It's been somewhere between here. I believe like the work token model, like a medallion, like a taxi medallion, Augur, Keep, New Cipher, they have this, which essentially like you it's like a license. Like you buy a license and then you can perform the work. Like that kind of makes sense, but it doesn't matter.
I was gonna say Augur is maybe like the only one.
Yes,
like,
exactly. Yeah, like a profit sharing scheme.
And they launch less than a month from now, July 8th or 9th.
We can only hope.
Yeah.
But let's see what happens with the Ethereum network. Let's hope they don't have another CryptoKitty moment. But yeah, at the end of the day, it doesn't matter because what matters is the reinvention of money. That's the biggest market. I like to say, in terms of total addressable market, in terms of money to be made for us as investors, and in terms of potential for socioeconomic change and socioeconomic consequences, all this shit pales in comparison to the reinvention of money.
Right.
And now we can, and we can discuss, of course, whether it's going to be Bitcoin, whether it's going to be Ethereum, whether it's going to be something else that's the winner. But I believe there's going to be one in the short and medium term, there's going to be a lot of shitcoin, a soup of shitcoinery, as I like to say. There's going to be a lot of quote-unquote experiments. Man, come on, don't be so judgy. We're all just learning here. We're all just experimenting,
right.
Bro, let the free market decide.
I get that a lot. Yeah. I get that a lot.
Come on, don't you like free markets?
But it's like...
yeah, but anyways...
I like free markets to the extent that people aren't scamming people.
But you know what? I actually... I used to think that, but now I think let them be scammed. Let them learn.
I'm completely on your...
Let them burn. Let them get burned, and maybe in the next... Maybe their children won't get burned, because they will get told. Or maybe their younger brother won't get burned, because it will only invest in sound cryptocurrencies with sound teams who are not scammers.
Yeah.
At the end of the day, I think people will come to a list of 5 and 6 cryptocurrencies that are essentially competing to be the big store value winner, and that's it.
Yeah, I would concur. I agree.
But
there's so much noise out there. People love the VC app culture of, hey, spray and pray. We're just gonna put our money behind a bunch of different teams.
It's like CNBC Africa or CNBC Crypto Trader. It's like he says, in order to be sufficiently, the correlations are 0.82. He says, in order to be sufficiently diversified in crypto markets, you need to have between 70 and 80 coins.
Go fuck yourself.
And he said, yeah, most of these will fail, but some of these altcoins will do 10,000x. We're at a dawn of a new era. This is going to be bigger than the internet, and we're going to have a blockchain for every website. We're going to have a blockchain for every database. Dude, the herd is coming. The virus is spreading. The gangrene is spreading.
Oh my God. It's so asinine. To think of the logistical infrastructure you would need for that. It's just there's scammers everywhere, freaks. Be careful. They're coming for your Bitcoin. There's no panacea for tech problems out there. This is a monetary phenomena. Again, it only happens once every few millennia, and there's a lot of confusion out there. A lot of people trying to apply bad heuristics or good heuristics in some areas, but bad heuristics in this arena to Bitcoin. And it's just completely different. It's confusing the fuck out of people. People are confused. They don't know what to think. And I would encourage everybody, like I did this morning with Saifedean, please read up on monetary history. You need to know your history. You need to know your history. Read up on monetary history.
Well, you have to. You don't have a choice because just like Saifedean says, hard money isn't a choice. You have to either choose the best money of the future correctly, or you're going to lose money.
Right? It's binary.
It's binary. And to be honest with you, I think Bitcoin and hyper-Bitcoinization, or just the success of any cryptocurrency, will create massive inequality. That's just sad but true. But it's just, I'm not trying to be prescriptive. I'm just trying to be predictive and descriptive.
I agree, but I would say that inequality would be better than the inequality that we have now, because the investments that would be made would be in longer term. You're not gonna have conspicuous consumption.
Well, exactly.
Planned obsolescence.
Bitcoin was never about destroying inequality. Bitcoin was about creating money that other people can't inflate.
Yes.
And so even if you don't have any Bitcoin, and even if you get paid in a little bit of Bitcoin, at least you can know that nobody can decay your wealth.
Exactly.
And that's what it's all about. Exactly. If anything, your wealth will actually slightly grow with the speed of the economy.
Exactly. And at the end of the day, it all comes down to how personally motivated you are to put yourself in a better place. And if you're willing to have a long time preference and save the little bit of Bitcoin that you make in the future, it will appreciate over time.
As more and more fiat currencies disappoint their holders, more and more people will find themselves buying Bitcoin.
Yeah, it's a natural progression, I would argue. We're an hour and a half in. Anything else you want to touch on?
yeah, this is pretty much it. I think that the space is moving. Like, look, I think that there's going to be a lot of interesting use cases, and there's going to be a lot of really cool projects, really cool software coming out, new consensus mechanisms, new technologies, whatever. But at the end of the day, I think there will be like a convergence. There will be a flight to quality. These 1,000 shitcoins that we have right now, they will die. Most of them will die. Imagine like walking around New York and having to pay different currency in each different store.
Right?
That's a nightmare. Like,
right? I got my Shake Shack bucks. I want to go to Chop though. I gotta convert them to Chop dollars. Like,
this makes no sense.
It makes no sense.
But
hey, they're all gonna be converted in the back end though. You're not even gonna see it.
Yeah. Exactly. Like they say, dude, it's all gonna be. It's all like there's going to be token abstraction. It's all going to be so okay. Like if there's going to be token abstraction,
why not just use Bitcoin?
Well, if there's going to be token abstraction, that means the price of your shitcoins will go down even faster. So I think that I actually think in the short to medium term, all these shitcoins most of these shitcoins will be replaced by stablecoins. And if hyper-Bitcoinization ever happens, they will be using Bitcoin.
Yeah. Let's talk about stablecoins. That'll be our last topic.
So a lot of people don't believe in them. I think
I'm skeptical.
I think they will work.
I know you do.
Disclosure, I'm an investor in a couple of stablecoin projects. But this is my issue. Now, I'm not a Bcasher, obviously, but it says that peer-to-peer cash on the white paper. Mm-hmm. And I believe that Bitcoin, as of right now, it's better to view it as digital gold, metaphorically speaking.
Yes.
And it's better for it to saturate that store of value, essentially digital commodity space first, before we use it as digital, like as a day-to-day currency. But it will be another 7 to 15 years before Bitcoin is big, liquid, and stable enough to be used as day-to-day currency.
Yeah.
And I think until then, stablecoins are necessary because they're like a synthetic dollar, or some of them even want to peg to the CPI or whatever, but they're like a synthetic
dollar. They want to peg to the CPI?
Yeah.
Please don't let them do that.
Well, they would have their own CPI that is not like government mandated.
But will the CPI be static for at least a decade?
It's like almost every stablecoin project is starting off
the
of
variables within the CPI. Would that be static for a decade, like weighted statically, or?
I can't speak on their behalf because all these details are TBD.
Yeah.
For the next 5 to 7 years, all the stablecoins want to peg to the dollar because that's just easier. You have to think of stablecoins as synthetic dollars that can get in and out of countries borderlessly. So capital controls collapse.
I understand.
And you will need them for dApps, and you will need them for all these things.
I agree. But like, what does an investment get you? Like, they're stable. Like, they're not supposed to increase or decrease in value.
That's true. Some of the stablecoin projects have like it's an equity investment, and they pay you whenever they expand the supply or whatever, something like that.
Okay.
You have to think of them as private central banks.
Okay.
In a way, like all cryptocurrencies are private central banks. Mm-hmm. It's just that Bitcoin's monetary policy is like ruthless. It's like it doesn't give a shit. Yeah. So it will take it needs time. The thing is that Bitcoin is the soundest money ever invented. And I believe it's the currency that's most likely to succeed. And it's also my biggest holding. Mm-hmm. But it will take time for it to be stable enough to be used as day-to-day currency. And if, for any reason, hyper-Bitcoinization doesn't occur, stablecoins could be useful.
Yeah.
I forgot what I was going to say.
Well, I'll come in and do a rebuttal to stablecoins, which is like nothing's stable. Stablecoins are only stable until they're not, and it's a hot potato musical chairs type game. You just don't want to be left holding the bag when shit hits the fan, because stablecoins are susceptible to black swan events, and as the definition of black swan event dictates, you can't predict them.
It's hard to say for sure. There's definitely a lot of risks involved, and they're definitely going to be fragile, especially early on. Mm-hmm. It really depends on the design of the stablecoin, and it depends on the kind of reserve or algorithmic or any kind of other kind of backing that is backing it. As long as the reserve is bigger than the stablecoin's outstanding, it will be fine. Yeah. And if a stablecoin grows to like $500 billion or $1 trillion, of course, this is like it's going to take years. But if that ever happens, then it will be stable by the property of people using it. Just like a lot of fiat currencies are stable. Yeah. So like the bigger it goes, the more robust it becomes. Mm-hmm. Of course, I do agree with you, however, that in the early years they are very fragile animals. Yeah. So what I wanted to say is I remembered is all of these currencies and like especially like fixed supply, these ones that have to get bootstrapped from like store value and then to medium exchange or whatever. Yes, they have the properties of the soundest money ever invented, the hardest currency ever invented, but money at the end of the day is a social contract of sorts, and it's an abstraction. It's almost like a contractual agreement, and you will accept Bitcoin if I will accept Bitcoin, and I will accept Bitcoin if you will accept Bitcoin, and we'll both accept it if we see that it's trading at like $200,000 or whatever, right? But these humans move a lot slower than software, and culture, as you can see, changes a lot slower than technology. And it will take time. Even the best case scenario, and hyper-digitalization does occur or whatever, is going to take time for people to come around, for people to see the value in the uninflatability, for people to learn about this technology. Like I advise all my friends, like study this for 6 months before even buying one. Like, right? Because like this is like they're very new, and it's like a different paradigm almost. So
almost it is a different.
It's a different paradigm, yeah. You almost need to like fully immerse yourself before kind of understanding everything. And like I've been looking at this for like 2 or 3 years, and still like I don't think I've scratched even 5% of the surface.
Oh, the more you know, the less you know.
Precisely.
It's insane. Like I thought, like 2014, 2015, I thought I was fucking, my shit didn't stink. I knew what was gonna happen. Then you just like I remember like before Bcash forked off, or excuse me, BCH forked off. Like people were like, hard forking was taboo. It's like if you hard fork, the network's gonna go to shit. Like nothing, like it's completely gonna collapse. Like you can never hard fork. And now we've got an index of hard forks that numbers in the 80s, I believe, and we survived. And I learned that I did not know what I thought I knew. Well,
I don't know. So I lived in China during the previous bubble, 2013, 2014, and that's like was my first kind of like foray into the Bitcoins and stuff. Mm-hmm. But I don't know if you remember, like before the whole ICO craze, we had like the pre-mine craze.
Oh yeah, pre-mine, yeah.
And like pre-mine used to be taboo. Like it used to be, if you pre-mine, then like that's a shitcoin. But now pre-mine is like a weekly occurrence.
That is how you raise money now. It's fucking pre-mining your shitty token.
That's what hedge funds invest in too, the pre-mines.
Well, yeah, because they get a discount and they could dump it at a 20% growth or at a 20% markup immediately as it hits an exchange.
Bro, masternodes, tokenomics, crypto economics, mechanism design. Bro,
Dude, we need multiple algorithms on this proof of work chain, right?
Yeah.
And that's like Verge dead. But like people are like freaking out about Verge now. Remember Myriad Coin? Did you ever like? So Myriad Coin, that was their whole fucking marketing piece, was like, hey, we had multiple.
Is it like kind of like Digibyte with like 5 algorithms?
Yeah, exactly. Yeah. It's like Digibyte, Verge, and they had similar things happen. Like 51%.
I honestly I can't believe so many of these things are so overvalued. They're ridiculously overvalued.
That's what I said.
They should all be zero.
Yeah, they should be. Yeah, but the market is market's still learning.
This is what I like to say, and I think people are coming around to this. Hopefully, more and more. There are, in terms of cryptocurrencies or aspiring cryptocurrencies, there is like essentially fewer than 6 or 7 non-scams.
I would wholeheartedly agree. I would even say less. And
yeah, there's probably less.
You can hear me slurring my words now. I think we finished that bottle of bourbon. 5th of bourbon. Not a whole bottle, but we're getting up to 2 hours here. We're at 1 hour 45 minutes. Do you have a parting note for the freaks out there? Like, what would you say as somebody who's written 2 prolific papers this year? Not papers, but publications. I truly love them. You and Adam did an incredible job on them.
Thank you.
Thank you for writing them, because that's something that's been in my mind for a while. Like, somebody just needs to understand like the different factions and then the history of it. Like the past and present was just an equally as prolific as the 4 faces.
Well, there's nothing better
people need to know your history.
There's nothing better than starting my mornings with my daily dose of daily bent.
Marty's bent.
Marty's bent. Yes.
That pales in comparison to the quality of your writing.
So I've been listening to all crypto podcasts for like almost 2 years now, and I'm telling you without exaggeration that Tales from the Crypt is slowly but surely going up the hierarchy of the best podcasts. I think it is top 5, maybe top 3 now, for sure.
Thank you. I appreciate that. I don't think so. We're getting there, slowly but surely. Guests like you help us get to the top, you know?
I mean, as I said, I'm nothing compared to the titans and compared to the true developers and true heroes of the space.
Maybe that's the parting note we can end on is BitDevs last night. Like, what did you think of that? As somebody who's been in the space for a while, like, what did you think of that structure of the meetup?
Long-term bullish on Bitcoin. Made me more bullish than ever. Was a great place. Was great meeting all the developers that you follow online in real life. They're extremely thorough. Like, I think Bitcoin is one of the most advanced cryptocurrencies. Like, people think that it's like the oldest one. People think that it's the MySpace or whatever. No. It is one of the most advanced, if not the most advanced cryptocurrencies in terms of the quality of developers. There are so many like projects and so many little things that they are improving on and optimizing on that people don't know.
I think we went over 50 pull requests last night.
50 pull requests, like 12 different papers, like 3 different new like sub protocols. It's amazing. Yeah. I'm very bullish on Bitcoin, and I like Zcash too. So that's what I'll say.
You like Zcash too? You're turning me on Zcash a little bit.
So people, the last thing I will say is this. I think this highly inflationary, pre-overwinter, pre-sapling, pre-Zcon 0, pre-first halving, pre-mobile wallets, maybe even pre-Starks in the future, like shorter, more compact, faster proofs. This general like bearish period and this general sort of next few months is a good time to invest in some Zcash. And I will publicly say that that's what I'm doing as well, because once once they will move to mandatory privacy, which is one of their hopes and dreams and plans, and once they have mobile wallets, and once right now it's like 88% transparent and 12% Z or hidden addresses, but they want to move to 90-10 in the other direction. And once that's a reality, I think this is going to be a very interesting coin.
Yeah, because people want their privacy.
People want their privacy, and like
There's no denying that.
Billionaires, like I think like Indian, Chinese, Russian billionaires, they want like a private store of value. Without people, I mean, like on Lightning, you will have some like private transactions or whatever. But like I think having private on-chain balances is very cool.
Yeah. No, I would agree.
And once again, I will say that I think this is like kind of a controversial view, but I think Zcash is the only contender for Bitcoin, and I will also say that Bitcoin is most likely to win.
Yeah, I would concede that as well. I mean, Zuku was working with Jim McCoy back in the day on, what were they working on?
Mojo Nation.
Yeah, Mojo Nation, which was very similar to Bitcoin. And on top of that, I've stated publicly in the past, like I think the next big debate in the Bitcoin space is fungibility, like privacy. For sure. That's the next SegWit battle is fungibility.
I like in my research, I think like, it's not gonna come in the next 5 years.
No.
On-chain fungibility.
Oh, God, no. God, no.
So, like,
it might take decades. Like,
well, the big hope is for like layer 2 fungibility, and it might be good enough for most people. Yeah. But like we will see.
Yeah,
we will see. Because I think like big, if any of these things go to like 6-7 trillion or whatever, and then people are using these for business or people using this for big payments, whatever. Like the big corporations or the billionaires, they like their privacy. Like it's really important.
Yeah.
I also like privacy, and I think it's a human right.
Yeah, it is a human right. I would totally agree.
Yeah. Like I don't. It's like I don't want to walk naked throughout the street. You know, like it's the same thing. Like because right now, if you pay like at least on-chain transaction, if you use Bitcoin to pay like an AIDS doctor, then everybody knows you have it. You know.
Yeah.
Or a less dark example, if you go to Starbucks and pay like the Starbucks coffee with an on-chain transaction, just hypothetical, of course, no one's doing that, but they can see how much money you have, where other shops have you been buying, what your salary is deducible, what's your daily expenditure, how much you're saving, how much you're buying, who your friends are, how much your mom and dad have money. Like, it's too much, man.
Yeah,
you know?
yeah.
And these machine learning algorithms, big data crunching, all this data mining are only getting more sophisticated. And these systems, I mean, all the transactions since 2009, they can see what all the track is.
Yeah, and people are pretty terrible at maintaining their UTXO set. They'll just
Right.
give up their private. Like a bunch of people fucked up their privacy.
So like you
caching
can go full cypherpunk and have like use open dimes as cache or whatever, and have like reuse addresses and have air gapped like laptops, whatever. Use like all these things, but at the same time, it would be cooler if that's all abstracted away.
Yeah.
Yeah.
I will not disagree with that. Murad, this has been a pleasure. It's been an incredible conversation.
Thank you, sir.
Where can we find out more about you? Where should we?
You can find me on Twitter at muststopmurad.
We must stop him because he's going to change the world.
Must stop MURAD.
MURAD. And we must stop him because he's going to bring in a better future. That's what the government's saying right now.
We're all, and you're doing the same with your podcast, we're all just doing our part to accelerating the adoption of cryptocurrencies.
I'm happy to be on the front lines with you.
Likewise, sir.
My name is Marty Bent. You can find me at Marty Bent on Twitter. If you like this podcast, subscribe, rate, share. Subscribe to my newsletter, too. Link in the bio of my Twitter account. I love all y'all. Peace and love, freaks.